Welcome to ShortView Trading. This is your morning market hit for Wednesday, the 15th of April. What matters today for traders? US markets remain bullish yesterday with the S&P and the NASDAQ both moving sharply higher on the trading session. That was led by an unusual combination of sectors with both defensives and tech stocks doing well. Amazon as part of consumer discretionary, but also of course a key tech stock, making new highs on the session and leading that charge higher. Now, whilst this is questioning our thesis about a rollover in US equity markets, it's interesting to note that bullishness in the US isn't confirmed by a number of factors in other parts of global financial markets. Indeed, to name three in particular, firstly, it's interesting to note that the correlation between the S&P and the yen is breaking down. Normally, a bullish S&P goes hand in hand with a weakening yen. Both are evidence of global appetite for risk. But in the last few trading sessions, as you can see from the chart, the yen has been strengthening and the Nikkei index been going sideways. In other words, not confirming what we're seeing in the S&P 500. Elsewhere, and equally interesting, the Russell 2000, which typically goes hand in hand with US high yield spreads, hasn't rallied since the announcement by the Fed that they were buying junk bonds on Thursday last week. Indeed, the junk bond spreads have continued to narrow and the Russell's gone sideways, as you can see from this chart. Equally consistent with that, high beta equity indices in the US, like the Russell, the S&P mid caps and small caps, those indices have rolled over as well relative to the S&P and not outperformed as you would expect in a risk-seeking environment. And finally, it's also really interesting to note the Italian spreads over German bund yields are widening in the last few trading sessions. In other words, risks are rising in the euro area, despite this strength we see in US equities. So there are a number of factors not confirming that bullishness in the S&P and NASDAQ, and not confirming that it's a broad-based global phenomena. Added to which, volumes were actually light in the S&P in the last few trading sessions and light again yesterday. And over and above that, all our short-term models remain on or near sell, whether that's the risk appetite scoring system, the technical scoring system, or indeed the put to call ratio. They're all there or thereabouts in terms of generating a sell message. So our view remains very much as per the last few trading sessions. Yes, we're being pushed by the market moving higher, but we're not seeing confirmation from other parts of the global risk appetite landscape. For the full details on how we're playing this, please see today's Daily Rag, available to subscribers and on the website. So what are we watching today? Well, all the factors we've been outlining over recent sessions, the evidence of funding stress and stress in financial markets, any further stimulus from policymakers. Interesting, we have the Bank of Canada meeting today. And over and above that, of course, the price action and the way it's playing out across the globe. In terms of key macro data, though, we've got US retail sales out today, and we got the NAHB housing market index for April. Those, of course, will be key and will give us some sense of the shape of the economic contraction that's coming and happening at the moment. Over and above that, it's also the Beige Book later on today, 7 p.m. London time. So that's it from us. That's your morning market hit for Wednesday, April the 15th. Thank you for listening. Please do subscribe on YouTube, LinkedIn, Facebook, and or Twitter. Thank you.